Nikki, last week the European Central Bank became the one institution that can save the euro, and today the European Commission says that the European Central Bank is going to be the chief banking regulator for Eurozone banks. In fact, the only banking regulator for Eurozone banks ultimately. I mean, next thing we know, it's going to be asked to sort of solve the Middle East peace process. But I mean, why does anybody think that the ECB will be a better regulator of banks than national regulators have been so far?
Well, the proposals today would make it the ultimate prudential supervisory authority for banks in the Eurozone. I think the answer is that it's free of the domestic political influences that have been so evident in the lead up to the European or to the global banking crisis. And that somehow the ECB will rise above these. It'll be less indulgent about German institutions just because they're in Germany, or British institutions just because they're in Britain.
Right.
That's really, in a nutshell, the answer.
Okay. Now, it's a gradual process, although it's a very speedy one. I think that 2014 is the sort of last year when this would fall into place. Speedy. But I presume that for a long time the ECB would be relying very heavily on and cooperating very closely with existing national regulators. So one can see an immense scope for conflict and for clashing interests here.
Well, yes. I mean, on the timetable, first you'll bring in, it will have responsibility for banks that are already in some form of assistance programme. Then you'll give it the really big cross-border banks. And then eventually, as you say, by 2014, it will have all 6,000 banks in the Eurozone. Yes, it will. Obviously, that workload will depend very heavily on cooperation with national supervisors, but that is to some extent how the system works at the moment. You have colleges of supervisors. What you're really doing here is giving the ECB the ultimate sanction. It can withdraw a banking licence.
And I just wonder whether the ECB is going to be far less interested in small banks at the sort of bottom of the food chain in Germany or Italy or wherever, I mean, in any Eurozone country, and much more concerned with the big global banks, and that a lot of the regulators' focus will be on those, and that it won't have time for the sort of those below the radar a bit.
Well, yes, I think that's probably true.
And I mean, this is where a lot of the banking problems usually come from. It's smaller banks that are they're as much trouble as bigger ones, or if not more so even.
Well, they may be as much trouble, but whether they have the same systemic importance, the problems, or they have the same spread and reach, is obviously that's less so. But yes, I mean, that's exactly the argument that Germany has made. They want the ECB's role to be as prudential supervisor to be restricted to those very large banks, and for them to keep control of the savings banks that are politically influential, but less important. I think that the ECB. I think you're right to some extent, but I suspect that it sees within those smaller savings banks all sorts of problems that cumulatively can be quite important to a country's sort of financial well-being.
Absolutely. I think clearly we have begun, I think, quite a significant shift in European banking regulation here with this announcement. One can see scope for lots of conflict, but it probably is, at least in theory, the way that Eurozone banking regulation has to go.